Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about some more positive news recently released around Tesla stock. And this time around, this will be involving analysts and price targets and things like that, specifically just about Tesla stock in comparison to a few news pieces that we've been discussing recently, which are more so about the company, the expansion of their business and services, growth, and things along those lines. So this is specifically related to the stock in comparison to other videos where we talk about the growth of the company, which still in itself is related to the stock. But like I said, this is all about the share values, price targets more specifically, and things along those lines. So as always, if y'all do enjoy these Tesla videos, please make sure to smash that like button. But before we get into this news piece where we talk about this upgraded price target, as you can see, Tesla stock is at a share value currently of $437.28. It's down 5.83% today. That's around minus $27.68 on the share price, and then another minus 2.26% in the after hours, which is about another $10.09 off of the share price. So there is a deep discount for Tesla today with it dropping so much. But as I've said in previous videos, today is definitely one of those days where I wish I had some cash on the sidelines to buy some Tesla stock, because I do think that this is a pretty solid discount for those that are wanting to hold the stock long term. But just getting into this news piece today, this is all about a new price target by Bank of America. And so we'll go ahead and check out this article by Business Insider, and then I'll share some of my thoughts and perspectives about things and then expand on it a little bit more. So as you can see, this is an article by Business Insider and author Carmen Reinecke, and the article states, Tesla is poised to surge another 16% amid signs it will use its lofty stock price to raise money, according to Bank of America. And so just jumping into some key points of this article, it states Bank of America on Wednesday boosted its Tesla price target to $550 per share from $350 per share previously, implying a roughly 16% upside from Monday's close. And then it also discusses the recent announcement of the $5 billion share offering from Tesla, in which the goal of that is to raise some capital for Tesla, which they can use for the balance sheets and also reinvest in the company, in which there has been some discussion for Tesla possibly using that for future Gigafactories. That's something that I would honestly love to see them use that money for. But regardless of what that money is used for, since it's Tesla, it will likely be used in the most optimized way possible. Tesla is all about optimization, efficiency, and trying everything to achieve these things so that you can grow your company even more and keep on scaling the business. So as I've said in yesterday's video, I actually thought this announcement of them raising $5 billion in capital was a really smart move, and it's something that a lot of big investors have been wanting Tesla to do for a while now, just because it does widen that gap between them and the competition when they have this extra $5 billion to use for scaling their company even further. And the interesting thing about that is that we've had such a huge growth spurt over these past couple of weeks, and then especially Monday as well. And then finally, when that was announced on Tuesday, even in the pre-market hours with the after hours, everything was looking really good. It was at plus like 6% for Tesla in the after hours the morning of that market day. And then once that announcement happened, the market reacted negatively to that as if it were a bad thing. And then we kind of had like a bad day yesterday at like minus 5%, and then today as well at like minus 8%, including the after hours. So I honestly think the market got it all wrong in their interpretation of this offering. Now, if it was another company that wasn't Tesla, where I would honestly question how they would be using this money in the most effective way, then I could understand people reacting negatively to that. But as we've seen with Tesla so far, even from their car sales strategy, where they started out with low volume expensive vehicles so they could continue to create higher volume, less expensive vehicles, that was a genius move in itself, and they optimized the order of that so that they could continue to grow their company and scale it at a higher rate. So just given Tesla's amazing track record of them utilizing everything in the most optimized way possible, and the fact that it's really early in its stages of growth, this is just one of those situations where you can actually look at the stock offering as a good thing, in my opinion. So it is kind of strange with today and yesterday to see such a big difference, in which a lot of larger investors are glad that Tesla is raising capital, whereas with the stock market right now, there seems to generally be a negative reaction to that with it being red these past few days. So I have discussed this in previous videos, and I'm honestly a fan of this move, but just getting into this this, it says the announcement was evidence of our thesis that Tesla will utilize its stock to raise capital through low-cost equity offerings in order to accelerate aggressive capacity build-out plans globally and drive unit/revenue substantially higher, further cementing its status as the dominant EV automaker, according to analysts led by John Murphy. And so I do enjoy the fact that this analyst agrees with this point that I've been mentioning, in which the capital raise is actually a really good move. And as I've said, it furthers the difference in competition between Tesla and everyone else, because everyone else can't just casually come up with $5 billion without it really negatively impacting their stock if they do a stock offering. So I feel like in this circumstance with Tesla, it's more beneficial for Tesla to do something like this than if they were to choose not to. And this $5 billion can really help them at this moment in time, as I said, with creating new gigafactories. Just imagine if they announced like 2 gigafactories between now and this time next year. That would be absolutely huge, given the fact that we already have the Berlin gigafactory being built, the Austin gigafactory being built, and then the Shanghai gigafactory being expanded on sometime soon for phase 2. So 2 more on top of that, 1 in India and maybe 1 in China. That would be absolutely huge in my opinion. And with this new capital raise, that is certainly a possibility. And there's also rumors going on right now about a potential gigafactory in India. And so this article also states the new price target came as Bank of America moved forward its sliding scale of valuation based on the theoretical growth opportunity afforded to Tesla. And that is according to Murphy. And another thing is that they also reaffirmed its neutral rating on shares of Tesla. One more quote from them includes a statement noting, "It is important to recognize that the higher the upward spiral of Tesla stock goes, the cheaper capital becomes to fund growth, which is then rewarded by investors with a higher stock price. The inverse of this dynamic is also true, and it is this self-fulfilling framework that appears to explain the extreme moves in Tesla stock to the upside and downside." And then Murphy ends this by stating, while Tesla's hypergrowth is not necessarily self-funding, it doesn't need to be as long as the company has access to plentiful low-cost capital. And then finally, he states, simply put, Tesla is a new disruptive auto company that may or may not be dominant in the long term, but that does not matter as long as it can keep funding outsized growth with almost no cost capital driving capacity expansion. So one thing that I have to note about this article is that although we are seeing an increase in a price target of $350 to $550, just judging based off of the quote at the end there still seems to be a little bit of uncertainty even from Murphy himself about Tesla, and this is something to take note of because in my opinion there is not uncertainty about who is going to dominate the EV future. Obviously as time goes on there will be some more competition, but you have to question yourself, will there be competition at Tesla's level given the fact that they are already stated to be 2 years ahead of some of their competition, as mentioned by the CEO of Volkswagen and also the CEO of Audi. Now these are companies that are actually admitting this, whereas other companies don't want to put any attention on Tesla. They don't want people to realize how far behind they are, and these legacy automakers are basically asleep at the wheel right now. So in terms of American company automakers, they are really in trouble aside from Tesla. And even Sandy Munro himself has stated that really no American car companies are requesting the documents about the Tesla engineering and design strategies, whereas a lot of these companies from other countries, especially in China and different locations, are actually requesting these documents and trying to figure out what Tesla is doing and how they can catch up to them. Whereas, like I said, these American companies aren't even trying to copy Tesla, let alone innovate and create a revolutionary vehicle on their own at the level of Tesla right now. So this is certainly a big deal to keep in mind. And like I said, with this analyst in the article, it seems that even they have some uncertainty around whether Tesla will dominate. And to me, this just tells me that some of these analysts, even though they're upgrading their price targets and things like that, they still just don't get it. They don't see these advantages that are clearly written in stone for Tesla right now, and it's going to continue on into the future as Tesla continues to scale their business and widen the gap between them and the competition. However, I do want to note that one of the main reasons for this price target increase was because of the fact that Tesla has chosen to raise this $5 billion in capital, and these analysts did note the benefit of that capital raise and kind of mention what I've been stating so far and how it can be utilized to scale the business even further, build more cars at scale, hire more workers, and things like that. However, I still believe, especially with the quote at the end of that article right there, that they are underestimating the power of this capital raise. Tesla already would have been able to dominate without this capital raise, but this just widens that gap even further. And so I just want to give them credit with the fact that they did note what this $5 billion could do for the company in terms of helping them scale and things along those lines. But still, with that sentence at the end there, questioning whether Tesla will or will not be a dominant EV automaker in the future, that in itself just shows me that they are once again making the mistake of underestimating this company. So even at this point in time, I think $550 a year from now is still too low of a price target personally. Analysts have continued to adapt their price target, and it seems like they're just keeping up with the Tesla share price instead of actually coming up with a legitimate share price based on the information around Tesla right now, what they're doing to scale their company, and instead we're commonly seeing this adaptation of price targets to the movements that Tesla is making. So it does seem like analysts are starting to wake up in the fact that they're not just saying Tesla is worthless. At least right now they are noting some assets that Tesla has, such as their huge footprint in China and the progress they're making right now with building more Gigafactories and then Battery Investor Day and things like that. But they're also still not looking farther into the future when it comes to how Tesla will not only just dominate the auto industry, but the energy industry as well. And I think that's something that definitely needs to be looked more into by these analysts. And one of the only few analysts right now that seems to completely understand Tesla and its potential is Cathie Wood and Tasha Keeney from ARK Invest. Honestly, if you're looking for someone that legitimately knows what's going on with Tesla, they've done their homework, and they can actually tell you a lot about the company and its possibilities, it's Cathie Wood and Tasha Keeney. And I think those are the most legitimate people in the finance community when it comes to analyses on Tesla. But with this video, even though I've stated that I think the Bank of America price target is a little bit too low, I still want to make the point that this is great news for Tesla because, of course, if we look at the share price right now, it's at $437.28. So there's a big difference between that and $550. That's still a long ways for Tesla to go up within a year. And like I've said already, I think Tesla will be much higher than $550 by a year from now. But still, the fact that analysts are starting to wake up, have semi-bullish price targets, and actually give Tesla price targets that aren't lower than what it's currently at for a share value, then that's still good in itself. And I think at this point, we have all understood that retail investors are just ahead of the curve when it comes to Tesla. So just this fact alone that we still have like kind of a bullish price target coming out from analysts right now, and then also with the case that there's even more bullish price targets out right now from analysts for Tesla that is much higher than $550, that in itself is good news. And even this article today is good news just because, like I said, a lot of analysts are naturally going to be behind on Tesla compared to what retail investors are realizing at this point. And that's just how it's going to be for a while, most likely, until they start to see this progress happening even more with Tesla. Although it is pretty clear right now for the future of Tesla, it's still going to take some time for these analysts to understand that, I think. But regardless, I think that will eventually happen. But I just want to take note of that this news piece is still pretty good news for Tesla. But anyways, I hope y'all enjoyed this video. Please make sure to smash that like button if you did. And also, feel free to check out Robinhood and Webull in the description below. If you sign up with my referral link, you'll get some free stocks. And especially with Webull right now, you can get 2 free stocks if you sign up with my link and deposit $100 into your account. Keep in mind, you can take that $100 right back out after you get your free stocks. So it's basically just free money and takes minimum effort. And also, I'm actually pretty close in the summer competition right now. Last time I checked, I was in 74th place for referrals, and all I need to do is get to 20th place to get a free Facebook stock. So if you'd like to help me out with that, I'd greatly appreciate it. But anyways, I hope y'all enjoyed this video, and I hope you have a fantastic rest of your week.